Tax season got you sweating? Feeling overwhelmed by complex forms and the constant worry of what you might owe? You are not alone. Millions of taxpayers across the nation face similar anxieties every year. But what if there was a way to navigate these challenges with confidence? What if you could unlock the secrets to potentially saving thousands of dollars, reducing your tax burden, and finally taking control of your financial future? Are you ready to take control? Because today, we're going to demystify the IRS tax relief programs for 2025. We'll provide you with the essential knowledge and actionable strategies you need to understand your options and make informed decisions. My name is Darling Professionals, and as an expert in IRS complexities, I've dedicated my career to helping individuals and businesses understand and leverage the intricacies of tax law. My goal is to empower you with the knowledge to avoid common pitfalls and seize opportunities for relief. The core problem many face is unknowingly overpaying taxes or missing out on crucial relief programs simply because they aren't aware these options exist. The IRS offers various pathways to assist taxpayers experiencing financial hardship, but navigating them requires precise information. Consider Sarah, a single mother who found herself buried under a significant tax debt after an unexpected job loss. She felt hopeless, believing there was no way out. However, by understanding and applying the right IRS relief program, Sarah was able to slash her tax debt by over 60%, regaining her financial stability and peace of mind. Her story isn't unique. It's a testament to the power of knowing your options. The IRS programs are constantly updated, and the 2025 updates are particularly vital for anyone looking to manage their tax obligations effectively. These changes can significantly impact your eligibility and the benefits you might receive. What are these updates? We'll reveal them in a moment, providing you with a comprehensive overview of what's new and what remains critical for your planning. Stay with us as we delve into the specifics of how these programs can offer you a financial lifeline. Let's begin with one of the most powerful tools available for tax debt resolution, the Offer in Compromise, or OIC. This program allows certain taxpayers to settle their tax debt with the IRS for less than the full amount owed. It's a significant relief option for those facing genuine financial hardship. The fundamental principle behind an OIC is that it represents the maximum amount the IRS can expect to collect from you within a reasonable period. It's not a guaranteed solution for everyone, but for those who qualify, it can be life-changing. The IRS considers your ability to pay, your income, your expenses, and the equity of your assets when evaluating an OIC. A key condition for an OIC is proving financial hardship and demonstrating that you genuinely cannot pay the full amount of your tax liability. This requires a thorough and honest assessment of your financial situation. The IRS needs to be convinced that accepting a lower amount is in the best interest of both the taxpayer and the government. To qualify, you must have filed all required tax returns and made all required estimated tax payments or federal tax deposits. You also cannot be in an open bankruptcy proceeding. These are foundational requirements that must be met before your OIC application will even be considered. Gathering the necessary documentation for an OIC is a critical step. This includes detailed financial statements, proof of income, records of all your expenses, and information about your assets and liabilities. Accuracy and completeness are paramount. Any missing or incorrect information can lead to delays or rejection. You'll need to provide bank statements, pay stubs, mortgage statements, utility bills, and any other documents that paint a clear picture of your financial standing. The IRS will scrutinize these documents to determine your reasonable collection potential. This is the amount they believe they could collect from you through various means. Consider the relatable pitfall story of John. Facing a substantial tax bill, John decided to attempt an OIC application on his own, without professional guidance. He meticulously filled out the forms, but overlooked several critical details regarding his asset valuation and future income potential. His application was rejected not once, but twice. Each rejection meant lost time, continued stress, and the accumulation of additional penalties and interest. John eventually sought professional help, but the initial self-attempt cost him valuable time and money, delaying his resolution significantly. What did John do wrong? He underestimated the complexity of the OIC application process and the IRS's stringent evaluation criteria. He failed to present his financial situation in a way that clearly demonstrated his inability to pay the full amount, and he didn't adequately address all the IRS's concerns. Understanding the common pitfalls is crucial for a successful OIC application. These include submitting incomplete information, failing to meet the initial eligibility criteria, offering an amount that the IRS deems too low based on your financial capacity, or not responding promptly to IRS requests for additional information. A well-prepared OIC requires a strategic approach and a deep understanding of IRS guidelines. Moving on to another vital tax relief option, let's discuss installment agreements. This program offers a more flexible approach to managing tax debt, allowing taxpayers to pay off their liabilities in manageable monthly installments over a set period. It's an excellent option for those who can pay their taxes but need more time to do so. An installment agreement is essentially a payment plan with the IRS. It prevents the IRS from taking more aggressive collection actions, such as levies or liens, as long as you adhere to the terms of the agreement. This provides a structured path to becoming compliant and resolving your debt without immediate financial strain. The key condition for entering into an installment agreement is that you must be current with all your filing requirements. This means all your past tax returns must be filed, even if you can't pay the taxes owed on them. You also need to demonstrate that you can make the agreed-upon monthly payments. There are different types of installment agreements. A guaranteed installment agreement is available if your tax debt is $10,000 or less. You filed all returns on time, and you agree to pay within 3 years. For larger debts, a streamlined installment agreement might be an option if your combined tax, penalty, and interest is $50,000 or less for individuals, or $25,000 or less for businesses, and you can pay within 72 months. For debts exceeding these thresholds, a non-streamlined installment agreement requires a more detailed financial disclosure, similar to an OIC, to determine your ability to pay. Regardless of the type, interest and penalties continue to accrue on the unpaid balance, though the failure to pay penalty rate may be reduced. Here's a checklist for qualification and avoiding penalties. First, ensure all your tax returns are filed. Second, accurately calculate the amount you can realistically afford to pay each month. Third, be prepared to provide financial information if your debt exceeds the streamlined thresholds. Fourth, make sure your payments are made on time, every time. Missing a payment or failing to file a subsequent tax return can cause your installment agreement to default. This can lead to the IRS resuming collection actions and potentially making it harder to secure another agreement in the future. Consistency and compliance are absolutely essential. What if you're already in an installment agreement and your financial situation changes? Perhaps you've experienced a job loss, a significant medical expense, or an increase in income. Can you modify it? Yes, it is often possible to modify an existing installment agreement. The IRS understands that financial circumstances can change. If you find yourself unable to meet your current payment obligations, or if your ability to pay is significantly improved, you should contact the IRS immediately to discuss a modification. Ignoring the issue will only lead to default and further complications. Modifying an agreement might involve adjusting your monthly payment amount, or in some cases, even transitioning to a different relief program, like an offer in compromise, if your financial hardship has become severe. Proactive communication with the IRS is key to maintaining your compliance and avoiding penalties. We'll cover that in more detail in the next video, exploring the nuances of modifying existing agreements and what steps to take. Now, let's address some of the most common mistakes taxpayers make when dealing with the IRS and seeking tax relief. Avoiding these pitfalls can save you immense stress, time, and money. Understanding these errors is just as important as knowing the relief programs themselves. One of the most frequent and damaging mistakes is failing to file on time. Even if you cannot pay the taxes you owe, filing your return by the deadline is crucial. The penalty for failure to file is significantly higher than the penalty for failure to pay. Filing on time demonstrates your intent to comply, which the IRS views favorably. Another critical error is not responding to IRS notices. Many taxpayers, out of fear or confusion, simply ignore letters from the IRS. This is a grave mistake. IRS notices are not just informational, they often require a response or action within a specific time frame. Ignoring them can lead to escalating penalties, interest, and more aggressive collection actions. These notices can range from requests for additional information to notifications of proposed changes to your tax liability, or even final demands for payment. Each notice has a purpose, and a timely, appropriate response is essential to protect your rights and resolve the issue. Perhaps the biggest mistake of all is not seeking professional help when dealing with complex tax issues or significant tax debt. While it might seem like an added expense, the expertise of a qualified tax professional, such as an enrolled agent, CPA, or tax attorney, can be invaluable. They understand the intricacies of tax law, can navigate the IRS bureaucracy, and can advocate on your behalf. A professional can help you determine the best relief program for your specific situation, prepare accurate and complete documentation, and communicate effectively with the IRS. Their guidance can prevent costly errors and significantly increase your chances of a favorable outcome. They can also represent you in front of the IRS, alleviating much of the stress. So how do you effectively respond to IRS notices? First, do not panic. Read the notice carefully to understand its purpose. Second, gather any requested documentation or information. Third, respond within the specified time frame. If you need more time or don't understand the notice, contact the IRS or a tax professional immediately. Always keep copies of all correspondence you send to and receive from the IRS. Send important documents via certified mail with a return receipt requested, so you have proof of delivery. This meticulous record keeping is vital for your protection and for tracking the progress of your case. As we conclude this tutorial, remember that knowledge is your most powerful tool in managing your tax obligations. The IRS Tax Relief Programs for 2025 offer genuine opportunities for relief, but they require understanding, preparation, and often professional guidance. Don't let fear or misinformation prevent you from exploring options that could significantly improve your financial standing. We've covered the foundational aspects of the offer in compromise and installment agreements, along with crucial mistakes to avoid. But there's so much more to explore. The biggest 2025 updates, including new eligibility criteria, expanded relief options, and changes to specific program requirements, are just around the corner. These updates could open new doors for taxpayers previously ineligible for certain programs or offer more favorable terms. Staying informed about these changes is paramount for anyone looking to optimize their tax situation in the coming year. We'll be diving deep into these specific 2025 updates in our next video, providing you with the most current and relevant information. Don't miss out on these critical insights. To ensure you receive all our future updates and in-depth analyses of the 2025 tax relief changes, make sure to subscribe to our channel right now. Hit that notification bell so you're alerted the moment our next video drops. For an even deeper dive into these topics and to get a head start on your tax planning, download our free comprehensive tax relief guide. You'll find the link in the description below. This guide provides detailed checklists, forms, and expert tips to help you navigate the IRS relief programs with confidence. Take control of your tax future today.